Last week, India worked on a long term agreement with Iran on the Chabahar Port and the international North South transport corridor, which will connect India to the Central Asian countries and would be a roadway to Russia and Europe. This article next talks about the discussion with UAE on the Indian Middle East Europe Economic Corridor. This would also supplement the maritime network. These corridors will stimulate economic development, enhance connectivity between Asia, Gulf, and Europe. It will connect India, UAE, Saudi Arabia, Jordan, Israel, and Europe in the future and will lay pipes for clean hydrogen export from India. What would be interesting for us to see is if such agreement also leave foundation for infra development by Indian companies. Interesting article on the discretionary sales increase in southern India. FMCG companies have reported higher growth in the southern states. FMCG brands are targeting products specially for the southern states. This is mainly due to the new age sectors such as startups and tech companies, which employ a lot of young force. They can easily afford higher discretionary expenditure. The southern states also have made robust manufacturing investments. Their remittances have also bounced back after the pandemic in states like Kerala. Now, if we compare the growth rate, the western part has stagnated, and in the eastern part of the country, the growth rate is still low. Another interesting data point is that the top three states with absolute withdrawal for ATM is Karnataka, after that is Delhi, and then West Bengal, which is a relatively larger state. This article talks about the private sector role and challenges and how they should reciprocate to the deregularization effort. It also flags the report of Indian automobiles failing safety norm and misleading labeling on food products. There might be more free trade agreement to push growth. Also, it touches upon the growth and human development and subnational regulation with respect to energy transition at the state level, where distribution and generation has to be economically viable. The article also talks about the role of AI and the huge dislocation it can create and how our youth must be trained in that field. It also indicates the scope of government investing or subsidizing private companies looking to set up artificial intelligence computing capacity in the country and also allocate seed funding for startups in the sector. In this article, the DPIIT secretary talks about the recent tweaks in input tariff for electrical manufacturers who want to sell in India but are shying away due to the import duty, electric vehicle manufacturers. He says that this is not about Tesla but other auto OEMs should also show interest, and they have seen two major multinationals come to India and have promised to set up manufacturing over time. Now, India would focus more on quality control to improve the exports. Also, if there is an NDA 3.0, they would be focused to simplify the FDI norms so that more money comes into the country. On the PLI scheme, he mentions that although the current PLI for domestic mobile assembly is low value addition, to create value addition, or that is backward integration into semiconductor foundries, etc., it would take much more time. On semiconductors, he mentions that even though it is capital intensive and the requirement of labor is not that large, it is still in the right direction because that signifies that backward integration and higher value addition via the PLI scheme. This article talks about the sale of SUVs, especially by the 4x4 SUVs from Mahindra for adventure tourism. And I personally feel that the Thar and other SUVs from Mahindra are a benchmark, and as the discretionary spending rises, people will end up buying more of these adventure vehicles. The powertrain ancillaries of the SUV will benefit out of such demand. Key players are M&M, then Shriram Pistons, Craftsman Automation, Divgi Torque Transfer. An interesting trend that we have observed is that younger people are increasingly purchasing tech-enabled vehicles and devices and are focused on safety. Meanwhile, individuals in their 30s are opting for adventure tourers, campers, SUVs. Looking ahead, there may also be a significant rise in demand for luxury SUVs like Land Rover and the G-Class. This article discusses First Solar, a US solar cell manufacturing firm that has become the most valuable solar company in the world. Now, Chinese competitors are struggling due to price war and trade barriers imposed by Washington. As a result, the price of solar cell in US has nearly tripled compared to the global average. Significantly, benefiting First Solar, notably China controls 80% of the global supply chain. And the questions to be asked are Indian solar manufacturers selling in US, are there any such play? CRAMs in solar manufacturing, are there any such plays? It's a long article. India Inc. Earnings growth reverted to the mean in the fourth quarter. Out of observing 1,000 companies, revenue growth has been around 10%, and PAT, which is profit after tax growth, has been around 16% year on year, excluding the BFSI, which is banking, financial services, and insurance sectors. Revenue growth normalizes to 6% and PAT growth to 10% year on year, indicating a return to average earning. In FY25, there is an expected to be more organic and bottoms-up growth rather than broad sectoral play. Now, post-COVID, demand was initially disrupted by high inflation, but in 2024, that continued demand and coupled with cooling commodity prices improved profitability of the companies. Companies with strong balance sheet will leverage this going forward to sustain their growth stories. Banks and automobiles have been top performers, although for automobiles, the vehicle sales at OEM levels are plateauing. There are early signs of rural recovery in the two-wheeler, but this is yet to be confirmed by FMCG companies in terms of consumption. The surge in power demand due to peak summer, coupled with lower coal costs and favorable regulation, continues to benefit generation and transmission companies. Pharmaceuticals have gained momentum in the US due to shortage of branded generics, though the Indian pharma market remains volatile. On the positive side, lower API costs and a strong product mix are boosting PAT for pharmaceuticals. Lower coal costs are also benefiting cement companies, which saw 9 to 11% growth in Q4. The steel sector is experiencing 1% revenue growth and 16% PAT growth, though cheap Chinese steel imports continue to impact realization. The IT sector remains in single-digit revenue growth, and if commodity price rise, the current rally could be cut short due to as margins would be severely hit. Now, on Saturday, GAIL entered into a 14-year time charter agreement with Cool Company, a specialized liquefied natural gas shipping firm. Currently, GAIL operates 4 LNG carriers and plans to expand its fleet to meet the growing demand for natural gas in India. GAIL manages a vast network of over 16,200 kilometers of natural gas pipeline across the country, holding approximately 70% of the market share in gas transmission and over 50% in gas trading. Now, interestingly, the supply chain involves shipping companies transporting the gas via tankers, which are then offloaded at ports and stored in storage facilities managed by companies like Ganesh Benzoplast or Aegis Logistics. From there, the gas is transported through the pipelines or by carriers to cities and homes. At the first final distribution point, maybe there could be smart meters which will monitor and manage the gas usage efficiently. This is how the sectoral index moved. This week, capital goods as a sector has done really good, along with realty, power, and PSUs. Thank you.